Oh, that's where you work.
Good afternoon.
Wow, that's really strong. Lower it a little. My name's John Coppolino. I'm a co-founder of Tigers, a specialty chemical company out of Michigan. Our focus is on sustainability. We're an impact investment opportunity. Our mission is really simple. We're a solution-oriented business model, and our mission with really only two products we manufacture. We manufacture a safer acid, which is a very low pH, and a safer alkaliner base, which is a very high pH. And then we license that technology to leading brands and companies in different categories to help them make their products more sustainable. So every day we're looking for companies. I'll give you an example. We did a license with a company called Zep. That's a big provider of disinfectants and cleaning products at Home Depot. And now Home Depot wants more sustainable products. So now our job is to help them reformulate their products so that they can provide consumers a safer, better alternative to the typical hazardous chemicals. And when you talk about being excited, we're excited because the product has impact across a lot of vertical markets. So it has impact in cleaning, in food tech, where we can make products last longer, fruits and vegetables by washing them. In agriculture, when we add it to crops, increases crop yield. In cosmetics, we can eliminate the need for preservatives by treating the water. And in biotech, we're working on a therapeutic where you can actually inhale this low pH through a nebulizer to treat COVID and other respiratory ailments. So we're excited. We have a brand new plant. We have a bunch of patents that have been issued, a bunch more that will be filed, and we're happy to be here today.
Hey, oops, that is loud. How's it going? My name's Dan Winters. I'm the Director of Portfolio Development at Gardner Standard. A little bit about us. We are a family office investment firm that focuses a lot in industrials and energy, but really across the board as well. What differentiates our kind of business plan is that we kind of focus in the lower middle market space, but also into really complex and distressed situations. And we kind of like to get into our hands into it and really become an operating partner and apply turnaround management, become one with the company, and ultimately, we're in for a long term. We don't have term or durations onto our investments. So, a lot of our portfolio companies actually have been now sectored and have been within the A&D sector, within industrials, within manufacturing, and we can go on to the problems we're seeing in the trends we're seeing in the industry. But I'll let everyone introduce themselves first. So.
Hey guys, my name is Eddie Vanderpart, and I'm running an impact venture fund, Virtue Capital Partners. We focus on a number of impact sectors. And for the industrials, probably the two that are most relevant are clean tech, clean energy, transition energy, and ag tech. And within that, we look typically for actually light asset models, but there's exceptions to the rule. And sometimes we invest in sort of heavy asset models, and more closely aligned in industrials. We look for stages, late seed stages through Series B. And for tech-enabled, heavy tech-enabled companies where tech can be, increasing returns to scale type of play. And an example that was already used here, but that comes through the 361 network, was where we invested in Acero, which is a gas to liquid company that transforms flare gas and renewable natural gas into oil that you can use in cars. At a 50% reduction in emissions for half the price that a gallon of oil costs. And that's an integrated strategy that plays out right now, and currently raising $400 million for that strategy. And much more is needed, billions of dollars are needed, but that has the potential to contribute 5% of the Biden Green Plan. So that's a very significant impact asset, so to speak. I'll leave it at that for now.
The first plant does about, what, 1.5?
Yeah.
Yeah, so that's rather impactful.
And they need about $6 billion for that, so it's not a done deal, but it's a big lift. But as you can imagine, a lot of people ask me the question, hey, why did you invest in oil? Because that's a terrible thing to do. But people forget that over the next 20 years, we have more than 100 million cars still on the road. And those cars won't vanish from one point to another. The global EV market share is about 1%, and only in Norway it's upwards of 50% of the new cars sold. So that will go steadily and slowly up, hopefully, for us. But that still means that there's a ton of cars that need servicing. And so for the next 20 years, you'll still have your sort of cleaner plant for that.
Great. So maybe back to you, John. How do you see, what's a home run for how you can help the world with your products?
So when we look at each vertical market, we're all about being mission driven, and obviously in biotech, if you can save lives, there's no greater feeling than that. And so our biotech company has the ability, through dealing with different respiratory ailments, to actually save lives. In our agricultural side, by going even to third world countries and being able to provide more crops, because we increase crop yield anywhere from 10 to 20%. We just tested about 15,000 acres in the Midwest on soybeans and saw a 13% crop increase by adding our product to the crops. In food, this is a great story. We're working with a potato company called Eagle Eye out of Idaho. They're about $1 billion company shipping produce all over the U.S. And they were being asked for a fresh cut potato to sell as a fresh cut French fry, but they can only get the shelf life to about 15 to 20 days. We were able to get the shelf life to 40 days. So now they got a contract with US Foods, which is the second largest food distribution company in the country, and they're going to private label it in all 63 warehouses. Now what's interesting about that is, number one, you lower your trucking cost because you go from frozen to refrigerated. Two, you lowered your storage cost all through the supply chain. Three, they taste better if you ever had fresh French fries, like at Five Guys. But four, most importantly, you're lowering the carbon footprint because now you're using less energy. So when you can have that many positive impacts, that's a great way to wake up in the morning. And then on the cosmetic side, there's a trend called clean beauty that everyone's focused on, where you really want to look at the label and see what you're putting on your body and on your skin. And we now know, we've proven that we can eliminate the need for preservatives by treating the water with our low pH product. And we're working with some big companies on that right now. So, sometimes you have to start with a little inch, right? And then you start momentum, and before you know it, it becomes, I guess, a movement where people are really looking to make a difference. And that's why our company was formed.
Great. Dan, what are you excited about or scared about as you allocate in the industrial energy sector?
Yeah, I don't know how much I can add about us saving lives and helping out our agriculture space. But what I can say is, I think what we're seeing
You
a
can
lot.
invest in John's company.
Yeah, it could be.
You can help me turn it around.
Yeah, so I guess what scares me, really intrigues me is, and you see this across the economy, because really, American economy is a large part of it are industrials and manufacturing and energy. Are you seeing the labor shortages? 4 million Americans just quit their job last month, and we're seeing the supply chain still having large ripple effects, and we can get deeper and deeper, but what scares me is, how this is a continuing trend, and, solutions are coming here and there, and we now have an infrastructure bill that may help and inject funds into the solution, but, long-term wise, I'm concerned where we see things going. So I think ultimately, I have faith, I'm optimistic, but those are the two major points that I'm always thinking about.
So I have a somewhat of a supply chain background, and the biggest concern, I think, around the globe right now is the supply chain. But I don't think we should be surprised, because when you have an economy humming at 100 miles an hour, and then one day you wake up and you just turn off the light switch, the supply chain isn't like a light bulb. You can't go back 6 months later and just turn the light switch back on. Because what happens is everyone leaves their job, and now they're sitting at home, a lot of people getting paid, and now they sit back and they go, I didn't like being a truck driver away from my family for 6 months a year, or I didn't like working in a restaurant till 2 in the morning, or I didn't like not having my weekends. So everyone is looking at their alternatives, and in the meantime, while they're looking at their alternatives, they have a little bit of a cushion for a while. So now trying to turn that supply chain back on, it's a human supply chain. And everybody has their own goals, their own wishes, their own quality of life issues that they have to address. There's family issues. And the other thing about COVID is we all know that it was as bad as it could get, right? Who thought we'd ever have to go through something like that? But there was also gifts in there. You got to spend time with your family that you may have not had. My 18-year-old and 20-year-old learned about drinking wine. They studied wine when we would have dinner. And we got to have dinners that we would have never had. So in some ways, it brought families closer together, maybe making people realize, is that the right job for me today? And maybe I want to look at alternatives. And I think that's one of the things that's out there on the supply chain side it's not going to change, it's not going to get fixed in a day because it's a bigger symptom of the problem. So something to think about. You can throw a lot of money at it, but if people don't want to go back to work or they don't want to go back to the job they were doing, we'll see how it plays.
Well said.
So Mark asked me, he stepped out to answer the question, what excites me, what he's scared about. What excites me first is that I think impact investing as a sector is fundamentally massively increasing. We had this morning a discussion under the tutelage of John Denniston, and he aptly explained that it's part of our lives. It's already here. And I would venture to guess that within a couple of years, there's no impact conferences anymore, because impact will be simply part of the DNA of all conferences and all investments, because consumers want it, investors want it, not only the inputs, but also the outputs, right? So that's exciting. We see every day, we get tons and tons of super interesting investment opportunities from all over the world, and it's exciting that it creates so much short-term and long-term results. Obviously, there's also tons of stuff that scares me, particularly close to home. COP26, it was for a lot of people a success, but at the same time, it scares me that we leave the world a significantly worse place than we found it in terms of climate change. It's very difficult to see actually a world happen which is 1.5 degree or less. It's a very difficult problem to solve, because we have to solve it not only as single individuals but as an entire planet. Hopefully, and this is again the discussion we had this morning, hopefully us as private citizens and the generation that's our youth that has taken up a large preponderance in 5 years than now, and 10 years than 5 years, will sort of demand it so much that it will happen not only from a government perspective but also from a private perspective, from a business perspective. And I'll leave it at that for now.
So I'm curious, in terms of supply chain disruptions and evolution, you explained that technology can solve some of those. How are you seeing supply chain, say, problems and opportunities play out in the industrial sectors?
So with supply chain right now, the biggest problem is trucking and materials, a lot of plastics. We ship in totes, so now you got to get your totes way ahead of time. Totes are big 275-gallon plastic containers. And then the supply and demand side, if you don't have contracts with transportation companies, we saw trucking go from 4,000 to 8,000 to ship to California. Now we're negotiating again. So you can end up spending an exorbitant amount of dollars on typical supply chain problems, and in some cases not be able to get the goods to market. You can see, if you've watched any of the documentaries or the investigative reporting on what's going on at the ports, where you have 80 to 100 container ships out at sea, which is the most they've ever had. Then the other problem you got is they think you're going to be short about 80,000 truck drivers. So unless you have the ships coming in, the trucks picking it up, and then the stores being open to receive it, you have a hole in the lineup, it's not going to go. We're fortunate on our side because we've seen incredible increases in the chemical industry of a lot of the acids we compete against, but our product is primarily made of water. So, our cost doesn't really go up at the same rate that other companies goes up. So when ZEP looks to formulate new products, they realize now not only can they be more sustainable, but they can actually save money. One of the problems with sustainability and impact investing, years ago I tried to bring a green strategy to New York office buildings, but not one owner of an office building would invest even $250,000 to make his building greener. It's just old school. So the problem you have is, in many cases, to be more sustainable, to do the right thing, and to do something that's going to impact the world, it tends to be more expensive. And it's very hard to get a company to spend more money until a regulator tells them, you're going to spend more money, and you have no choice now. So now you're investing. So I think that's been the slow adherence to a lot of the sustainable initiatives that everybody would like to see, is typically they're more expensive. So if you can come with a either less expensive or kind of flat equation, but you can provide sustainability, that does give these big companies the opportunity to say, look, we are doing the right thing.
Yeah, just going off what you said, the solutions to what I think supply chains are and where we are there. I think at this time we're seeing an incredible amount of ships out of port. We're seeing warehouses bring to the low. We're seeing a high demand for new warehouses, and the whole system is just out of sync. And I think it takes a little bit of time, like you said, for the light bulb to kind of turn back on, and we'll eventually get there. But it's a whole revamping with the job process as well. It's a combination altogether. In terms of I liked what both of you guys said about impact investing. I think what's interesting there is in 15 years, where is impact investing going to be? You said it'll be within the DNA, but at the same time, we'll have a whole new kind of frontier of impact investing that we couldn't even think of at this point. So I think, whether it will be the metaverse and the new frontier of that, or new form of blockchain, there's always more to come. But I think at the same time, it is challenging always to get the first person on board. So.
That's true for everything, yeah. I want to come back to a comment you make, John, that it's tough to sell the solution if it's more expensive, and people with a green heart even don't make that decision. But for us, we look at it a different way. We won't invest in companies where returns are concessionary, because if they're concessionary, there's a part of philanthropy involved. Typically, it's a different door for us. So we say, hey, we can only invest in it if it's in and of itself, if the unit economics for the business manager, for the customer, are very attractive. And then we look at it. And then it has an alternative angle. We do invest in our charter, it says we need to have a double bottom line approach. So folks don't need to optimize just financials, but also something else. So for example, reduction of CO2. But at the same time, we only invest in companies that can handle both, that they can be optimized both at the same time. And I would venture to say that it's because of the impact angle that more and more companies will be profitable, because stakeholders demand that. And in those sort of virtuous cycles, we chose industries in which those virtuous cycle exists. So some of the industries it doesn't, and some of the technologies, for example, are very far out. If you look at companies like Breakthrough Energy Ventures, they have a very, very long horizon, 10 years plus. And so for them, unit economics might not matter in the short term. But for us, we're more a classical fund. So for us, it matters. It needs to be an exit opportunity. It needs to have positive unit economics. And so to the extent that we can mold that, we have a good impact investment. But I understand it from your perspective that sometimes if you sell a service, or you try to convince somebody that he has to do it, yes, it's really an okay product, but it's very green, that still is difficult. But over time, I think more and more stakeholders will demand that. So the customers of a real estate building where they are, they will sort of demand a rating in terms of energy efficiency, for example. Those things will become more important over time.
Well, we were a little ahead, because if you go to buildings now in New York, they've obviously started getting more green. We were maybe 5 or 10 years a little early. So, and on our company, our margins are very good, And one of the things you learn, as you said, is if you can make money, you then can become philanthropic. So by making money, it allows you to then give back. And obviously, everybody wants to give back. I think that's why we're all here. Yeah, so part of the investments, the investors that we target are ESG type funds because we fit so well in the sustainability side, the governance, and the environmental side. So, all of our products are helping other companies become more sustainable across the board. What's really interesting, if you do research on the word sustainable, it's almost like all natural food. Nobody really knows what it means. But there's a lot of definitions. And what you'll find is each company defines sustainability under their own definition. So, we've learned a lot about what's sustainable, what's not. Is a company sustainable or is the product sustainable? So there's a lot of pieces to the puzzle. But yeah, we're very targeted on the impact side and the ESG side.
I mean, we're going to hit the whole topic in spades tomorrow. Our impact summit being tomorrow. We're going to... Question? Oh.
I'm curious, how are you guys measuring impact? Because impact's great, but there's no kind of benchmark, or I know there's various consultancies and stuff like that, but there's not a gold standard. What are you guys measuring when you guys look at impact?
Yeah, that's one of the massive issues, right? The industry is in infancy. There's no bench. I mean, we look at 5 different industries with very different types of impact. So in healthcare, we look at better patient outcome, more access to healthcare, right? So you can measure that to a certain extent. And every company within its space will have different outcomes. So we invested in a company, AI diagnostics company in the emergency department. So to what extent are they saving more patients than the next best option? That's the delta they generate. You can actually relatively, I wouldn't say relatively easily, but it can be actually implemented in a dashboard, right? As long as you have the conversation that you implement it in a dashboard and then over time consistently measure those outcomes and look at those outcomes and compare it, that's something. But obviously there's it's in its infancy. ESG reporting is in its infancy. There's no standardized approach yet, and every sector will be different. But we look at it from company to company. We start having the conversation before we make the investment with, okay, so we understand the financial metrics typically. What are your double bottom line metrics? How are you measuring those? What are you doing to optimize those? And we continue the conversation from there.
I heard from one fund manager you can almost make ESG out of any investment, so I don't know.
I think what you have to do when you're looking at impact is you have to look at the microeconomic side to it, because no one has really figured out the macro side. The macro side is a lot of people talking about we're doing great stuff for the world. The micro side is how many more people eat, or how many lives have you improved, or so you can look at it little pieces at a time. I think it's still hard to judge in a big scale because, like you said, there aren't a lot of metrics to really judge against. But you certainly can look at it, one small step at a time.
This is Mr. Industrials here, so.
We do have some industrial assets, but how are you guys dealing with supply chain matters in the COVID recovery here? Because it would seem like that would hurt some valuations on industrial properties, but you got to look at things pro forma down the road. So yeah, supply chain.
Well, for us, for a lot of our companies, we're now we're now doing wholesale sourcing, and now that our biggest whole objective is to get all the matters in place, so we're not facing any type of delayed timelines. I think especially for a few of our A&D companies, where the parts need to be at Boeing or at the GE plant right away. It's important to have those parts in place, and I think what we've now been adding into our system is now we've been actually wholesale sourcing from various countries, not only China now, and now we're trying to really just get around the problem. So, how about you?
So just-in-time inventory is very challenging during a supply chain dysfunction. So you have to plan way ahead. Maybe you have to carry a little more inventory than you typically would carry, because you got to make sure that you got to plan on something's going to go wrong. right? So your bottom line can get hit a little bit because you're carrying more inventory, you're planning way ahead. Now, the advantage of planning way ahead is you can negotiate better rates in many cases, right, if you extend yourself out. So depending on the size of the company and what they're doing, I can guarantee you, though, that the supply chain has now once again become a primary focus of every major industrial chemical company in the world. You know, that's the first thing that happens in the management meeting.
Is the variation, because Rob, I asked about supply chain when you were like practicing your ping pong, but can you talk about reshoring as it hits the industrial sector? The reshore movement, are you seeing, we're seeing in pharma, some parts of consumer, are you seeing reshoring? I mean, Peloton may not have gone to Ohio in years past, but are you seeing that as a factor in any of your investments?
Well, for one of our companies, actually, Wisconsin Pharmaceutical, we're now trying to do a roll-up or more per se, and we're trying to, and those are all American brands really, and we're trying to take more small and mom and pop shops and trying to, because of reshoring, we're trying to bring them up into the Midwest and try to bring them all together. So I think it kind of brings it, reshoring. We've been really concentrated in the American market already, but I think with reshoring we're having an extra emphasis, and then you're also seeing those small companies now be getting more attention and for kind of a roll-up type of situation.
Go ahead, Eddie.
So one interesting example in the European cannabis industry, medical cannabis industry, as you know, there's no consumer cannabis in Europe. They imported, the UK company, they imported the big Canadian American brands, and lo and behold, had a very significant supply disruption, which is not great if you're a patient. So they decided to, as of early last year, when the pandemic hit, to try and basically make their own brand as alternative, and that was the only one that was available. And luckily, it was a very positive experience. And now they sell privately. It wasn't their intent to do, but as a result of that, luckily they were able to sort of create a private label out of this. So make something great out of something that sucks badly.
In terms of the supply chain, right? Why do we go all the way to China and Vietnam? Why can't we just focus, say, in Mexico or even Central America where they need it?
And I think that goes back to decades ago when we saw a lot of industries, from the computer industry to manufacturing to clothing, move to China. And the problem is, once an industry moves to China, the infrastructure goes with it. So it's very difficult to bring that infrastructure back, and that takes time. And you can see that happening as we speak, as a lot of manufacturing from U.S. companies have either pulled out of China and gone into different parts of Asia, or have started going, as you said, to South America. And I think you're going to continue to see that, because we've realized now that if you have a broken supply chain all the way to China, people might not get their toys under the Christmas tree this Christmas, right? No doubt about it. It definitely has advantages from a sustainability standpoint also. So, great point. But I think you're seeing that movement take place as we speak. But it'll take, once again, it's something that's not going to happen overnight. It's going to take a long time. Thank you.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.